What is going on, guys? Welcome to the video. In today's video we are going to go over how you can retire with a lot less money than what everybody predicts. Everybody says you have to have millions of dollars. I'm going to prove them wrong, and I'm going to show you how you can do it as well. So with that being said, let's go on ahead and cue the intro. I've been getting dirty money. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. What's going on, guys? Welcome back. This one, all you guys can see is Qyld. So this is actually not how I would plan on retiring. Qyld is not a bad fund whatsoever. I was pretty upset about the taxes because, again, I like to be able to get away with as much as I cannot have to pay in taxes that I can, but that's okay. So my biggest problem with Qyld overall is the overall price. I don't want to invest in depreciating assets. Now, the great thing about Qyld, obviously, is this 12.64 factor here. It's a great thing to have. I'm not going to lie to you guys. It's awesome. But it comes with a price, obviously. And if you look at the year to date, it's down 12.74%. If you look at overall max, you're only down about, I would say 7.5%, almost 8%. But the difference is you're getting all of that income. Now, like always, I want to show you guys an alternative in order to beat Qyld and RYLD and stocks just like it. Now, there's a couple of different funds out there, and I've looked through the whole market, and again, I don't think you should just invest in one stock, but I know there's people out there that are like, screw diversification, we want to invest in one stock and we want to just keep putting our money in there. And a lot of people, that ends up being the S&P 500, and there's nothing wrong with that. That's what everybody tells you to do, and if you have a 401k, it's pretty much the same thing. But you're here because you're watching dividend videos. So I want to show you guys just a couple of different ideas. So backtest portfolio, if you really look up Google portfolio visualizer, you guys will be able to use this. I'm going to put $100,000 in here. Why? Because I just want to show what can be done with $100,000. We're not going to contribute anything into this. And I'm going to show you a couple different things. So the benchmark ticker is SPY. I'm not going to do anything else with that one, but the other one is Qyld. The other one is HRZN. Now the one thing you're going to notice is none of these are closed-end funds. Now, because you could add one like PTY, but PTY is not doing good right now, and I don't think it's the best investment right now. I think you're going to see that a couple of these other ones are actually going to do better. And it's 100, and we'll show it because I think it is great to see overall kind of where you're at with it. And again, PTY also cut their dividend a little bit. So if you look at it, SPYs, obviously, if you never put another dollar into, you're going to end up having money overall. Now, here's the biggest fear that I have about retiring. And now, you guys may be completely different and not care. I care about what is my main principle, as in, am I going to have to use the money for my principal? Best way to put this is I'm worried about income when I'm retired completely. Meaning, am I going to have enough actual cash flow to sustain my life? Or am I going to be stuck selling stock every single month, even when the market takes a dip, and I'm having to sell more shares at a lower price just to get my monthly income to where I need it to be, and being able to outlive that money is what most people worry about. So, the one thing that we focus on is income. How do we boost that income long term? Not right now, not tomorrow, not today, but years from now. So this is what's great about this tool, is you're going to be able to see what it would have been like if you would have put $100,000 into the market at these certain tickers and Qyld. So SPY is obviously going to be a lot lower. Now, you're going to see your very first year with PTY, it's actually going to outperform these because you're at about 12 cents per tick, or 12 cents per share is where it was, and now it's down to 10 cents. So you're going to see that that's going to decrease over the time. I'm aware of these stocks. HRZN is still very, very consistent at 10 cents still. So you're going to be able to look at that. And Qyld was just introduced, but they still outperform portfolio-wise in HRZN. Now, here's the difference and why I like HRZN so much, and you're going to see that it's actually going to outperform a lot of index things and stuff like that when it comes down to income, and it's actually going to end up doing better than some of these like QYLD, RYLD, things like that are made just for income as well. Now, why? Because QYLD doing a covered call. That's why. But HRZN is going to be able to give you, they're investing in other things that you probably can't get your hands on in real life scenarios, and they're going to give you a monthly dividend from that. So HRZN, again, the second year all of a sudden becomes the top income producer. Now we get to year 3, PTY obviously is back on top here. Now, why can this change? Well, stock prices change, maybe, things like that, your investment rate. So if HRZN paid you more because you were able to buy more shares at a lower price, well, all of a sudden the next year HRZN is probably going to have a little bit more income or come very close. QYLD is still slacking behind here in this one. And then again, you can see, now in 2018, QYLD had a fantastic year, I'm not going to lie. You're going to see that's why it's actually up. Now again, if you continue to follow through here, and if we go to 2021, because that's the last year, you're going to see that HRZN is basically going to give you 19 grand, PTY is going to give you almost 19 grand, and QYLD is going to give you 23,000. 2021 was a great year for dividends in QYLD if you were just buying back stock. Not if you were taking that money out. If you were taking that money out, it wouldn't have been great. It wouldn't have really mattered. Your income never would have really went up from 2014. Maybe a little bit. Maybe it would have buffered a little bit. So the thing I want to look at here is where is the real number, this initial amount here that you can retire at. So, and I think it's a very doable number. $350,000. I think this is a very, very doable. A lot of people will actually have this amount of money before they even know it if they do it correctly and they reinvest dividends. So as you can see, SPY is still going to outperform everything. Number 2, HRZN. Number 3, PTY. And then number 4, QYLD, sadly. QYLD is still not pacing overall with the market. You're going to see the money difference here overall is HRZN is actually going to put up a fight with SPY. And that's a good sign for a dividend company that you are going into long term. So now again, the one thing we always want to look at here is, where's my income? Because the average income in America is just over $50,000, I believe now. And you want to be over that in order to be able to retire. So HRZN, we're at $35,000. Now, me, if I'm going to retire, I don't want any debt. I want my house to be paid off, things like that, or at least have enough money to pay off my house. I don't want to have car payments. I don't want to have any of that. That's just how I would want to be if I'm going to fully, truly retire and live off of dividends. Now, QYLD, $37,000. HRZN, $35,000. PTY, $47,000. Now, a lot of people are going to have a lot more than $300,000 before they actually know it in their retirement. It's not going to take until you're 70 years old. And you're going to see if you would just put them in here, all of a sudden, 10 years later, or not even 10 years, like 6 years later, HRZN is actually going to make you over that $50,000 mark. You're almost going to be at $70,000. PTY is going to put you at $66,000. And QYLD is going to put you closer to that $82,000, $85,000 range. I would actually put it back down to about 80 range because this year, this 2021 year, you're going to pay a lot more in taxes. So you're actually probably going to actually bring home like 65. And that does suck. I'm not going to lie to you guys. But that's where. Now, a lot of people, the average retirement, I'm not sure exactly what it is now, but for the longest time, it was about $1 million. You had to have about $1 million total in things. But you don't need that. I'm going to say, let's say we don't even get to $500,000. I'm willing to bet you can live off of under $500,000 in dividends your first year almost. Again, but no debt, guys. This is the biggest thing. If the only thing you have is a house payment, you can do this. Depending on your house payment and how you live, did you live within your means your whole life, or did you pay off all the stuff you had your whole life? That is going to be the main factor for 99% of you all. If you have a lot of debt, if you have car payments, you have all that, guys, forget about this. This is not going to work. But if you live within your means, you pay things off, you don't have credit card debt, you don't do extra things that put you in more debt, you're going to be able to do this. say you're 35, 40 years old and you know you have 300,000, which could be if you guys save money. There's a lot of high income earners actually out there that are able to do this. And again, don't have a $2,000 mortgage, guys. Believe it or not, you don't need it. It doesn't matter at the end of the day when you're trying to retire. But all of a sudden, you know, you're in the 50s range here, guys. Year two, you would have been in the $50,000 range. And 99% of people in America actually live off of less than $50,000 a year. It's like right at $50,000. And if you are below that line, which means you're already used to living off of under $50,000, which means all of a sudden now you're going to be able to retire, guys. And that is how you use things that are still going to appreciate. And again, there are stocks out there you may have to adjust. Maybe you use all three of these stocks. Maybe you add another one and be able to use those things, and you get $50,000. And again, if I'm doing a retirement fund, now say you need more money, guys. You need more money to retire. Say you're making $500,000 a year, guys. You should be able to save over $1 million pretty quickly. I just have to make sure I got enough zeros in here for you guys. That's always the thing. Now all of a sudden, you can take $1 million and turn it into millions. And not only millions of dollars, now you're a six-figure income earner from doing absolutely nothing, letting your money sit there and do nothing. This is how the rich get richer, guys. Even if they still work, they can put $1 million in the bank and they're going to make six figures no matter what. And they can continue to dump money into this. Or they just let it sit there, and if they wait 6-7 years, they're going to double their income almost. Because if you make $100,000 the first year, 100 to 1,000, well, year 6 you're making $192,000, $200,000 for just setting $1 million aside. That is the biggest difference. I don't want to make this video any longer, guys. I think you guys got my point. Thank you guys all for watching this video, and I look forward to seeing you